Hello, good afternoon. You're watching Your Trades on ET now with me, Vinny Motiwala, along with me is Pankaj Podar as well. Very good afternoon to you as well, Pankaj.
So when we just look at the markets, this week, Vinny, we can see that markets were up 1.4%, but it was all about, what was happening in the Adani group of stocks. 27 stocks in the Nifty 50 constituents advances this week, and we had big events. We had events like the Adani FPO being called off. We had the budget that came in, whole host of numbers across sectors, and a lot of commentary coming in on those fronts. However, the mid cap index snaps the 4 week losing streak. Indian Hotels, Dalmia Bharat were among the top gainers, and the small cap index up 1.8%, where you had First Source, KPIT among top movers. FMCG led the move. This was led by ITC. Britannia towards the end also did particularly well, and IT gained for fourth week in a row. However, metals, which was gaining earlier, now started to decline. So metal index itself was down about 7.6%, and I think that when you just look at the Adani group of stocks, despite the late comeback towards Friday second half, you had Adani Total Gas, which was down 45, Adani Enterprise, which was down about 42%, Adani Green down 37%, Winnie, Adani Power, Adani Wilmar, Adani Port were all down to the tune of 27%.
Absolutely, that's the wrap coming in on the markets for this week. But let's bring on board our guests for today. We have Rajesh Palviya as well as Kunj Bansal joining with us this afternoon as well. Good afternoon to both of you all. And Rajesh, I'm going to come to you. Firstly, let's just talk about the markets that we are seeing coming in. Nifty up 1.4%. Mid-cap space has also managed to snap its 4 week losing streak and finally managed to gain this week as well. What is your understanding of the markets? What are we looking at in terms of the markets going forward for the next week there?
So yeah, it was very volatile week. A lot of events were lined up throughout the week, and market has reacted to all the events, and especially end of this week has shown some sort of recovery. Especially short covering action was there in the Nifty as well as in the Bank Nifty. So if we describe the setup for for Nifty first, so looking at the now setup, the 17,500 is likely to act as a major support area as of now for near term to short term basis. Because multiple times we have seen, Nifty attempted to break those level, but on the closing basis, that level is defended by the market throughout the week also. So 17,500 would be our stop loss to remain on the long side. In today's data, we have seen some short covering action was there on the call writing front. So this upside momentum we can expect towards 18,000, 18,100 in the continuation of the trade which we have seen in the today's session. So our target is 18,000 to 18,100 on the higher side. Stop loss for taking long position is at around 17,700. In Bank Nifty also there was again short covering action. Now Bank Nifty is comfortably closed above 41,000 level. So looking at the recovery in especially in second half of the market, we believe that that this momentum can extend further towards 41,800 to 42,000 in the continuation of this trend. So one can remain long with stop loss of 41,100, and we are projecting target of 41,800 to 42,000.
Kunj, what will be your perspective of this week? We had the whole Adani fiasco happening. We had the budget, FOMC meeting. With so many events, we were still managed to be 1% up.
Yeah, and let me add to what you said is that despite aggressive global selling, aggressive FII selling to the extent of almost in the or rather to the in the range of 3 to 5 thousand rupees crores every day except one day which was positive. So that was another negative, and we have closed positive. So in fact, let's look at the market from a slightly different perspective, or not different perspective, but from a medium term perspective. So while the last week's movement as well as the development and events have been over analyzed and over talked about, if we look at our own market now, it's last 18 months, 1.5 year that the market is in a kind of a range. It hasn't so the same levels of about 18,000 odd were there in the months of, let's say, August, September to 2021, and today we are at the same level of Nifty. And in these 18 months, a lot of things have happened, a lot of water has flown. So we first came out of the COVID shadow and negative developments. From there, we moved into globally as well as in India, very high inflation. That obviously got followed by the interest rate increase all over the world, again by global institutions and by the Indian RBI. And then we went into the geopolitical war, that plus some other developments leading to commodity prices going up. And so we saw in the initial period of 2022 how the metal prices moved up sharply, or rather before 22, and then they corrected. Oil price went up to almost $100. So that has been the kind of the market that we are seeing for 18 months, not moving anywhere. That partly addresses the question that we keep discussing and talking, that Indian markets are always expensive. So yes, that is a fact. That is a hard fact of life. It's now the largest growing economy as projected by the various World Economic Organizations. So for largest growing economy, highest growing economy, the markets will be expensive. But that's the kind of correction, that time correction that you get in these kind of market. So that is where we are in terms of the Indian market.
Right, Kunj. Rajesh, I want to talk more in terms of a sector specific, that is FMCG. We had a whole host of numbers that actually came out in the FMCG space this week as well. And, FMCG is actually gained for the second straight week. ITC was at its lifetime high. Britannia also saw a stellar move coming in post its numbers as well. What are you picking up and understanding from the FMCG space? Anything that you're liking over here then?
So clearly, ITC is a winning stock from that sector, and we believe that the kind of breakout which we have witnessed in the ITC, that really can extend further, and we believe that this stock can move further higher from the current level. Also, to those who are already holding the position, they can remain invested. Upside target for ITC could be around 400, 415 in the continuation of this subtrend. One can now keep a stop loss of around 380, 365. Another stock which we like from that pack is Asian Paint is also showing some bit of recovery from its recent low. After a consolidation of 5-6 trading session, now stock has shown a good breakout of its falling channel on the daily chart. So looking at the breakout and looking at the short covering action, we believe that Asian Paint can continue further more uptick from the current level. Upside target we are projecting around 2830, 2850 for a stop loss of around 2700. So these two stocks are looking promising from this pack.
Kunj, I think SBI has just declared its numbers, and when we just look at the numbers, it's 14,200 crores versus estimates of 13,000. But say if there is nothing major new in the numbers, what will be your view on PSU Bank, specifically SBI?
Yes, so we till about let's say 15-20 days ago or about a month ago or so, we were seeing continuous rise in the PSU banks share prices, obviously leading to the revaluation that happened in the whole PSU banking space, which was well deserved, because this was on the back of the consistent improvement in the financial numbers over last 2-3, in case of some banks 4 quarters. And in terms of multiple parameters, there was improvement in terms of asset quality, there was improvement in terms of disbursement growth, there was improvement in terms of net interest margins, and as a result leading to the profitability improvement as well. So now that at that point of time, if technically we talk, not that I understand technicals too much, the PSU bank index had reached almost a 7-year ago level. So that also puts in light the fact that in the last 7 years, the 6 years were of long underperformance by PSU banks, and last 1 year, or maybe if not 1 year, slightly longer, 1.5 year kind of period, was a period of sharp outperformance. From there, partly led by the market correction, partly led by the fact that the percentage rise, or even in terms of absolute rise, that had happened a lot in the share prices, and then partly led by the recent market developments, corporate developments, news flow announcements, we have seen some correction. But given the way the numbers have been improving, and I think the numbers for PSU banks are likely to continue to improve. At some point of time, whenever we see stability in the market, we will see the buying interest coming back in the PSU banks, and as a result, we can see them start going up again.
Rajesh, when we just talk about what's happening with Adani, how can it impact banks? What is your view? You think correction is a buying opportunity for the banking sector as a whole?
Yeah. So definitely, yes, there was a panic in the bank also when Adani stocks were, hammering in the throughout the week. But most of the banking stocks have shown, some of the short covering action also, especially in our previous trading session and today's session also. So from PSU space, yes, again Bank of Baroda is looking attractive, Canara Bank and SBI. SBI after a number again we have to see how it reacts. But overall, if we talk about the long-term perspective, the overall structure for SBI is still bullish. And despite of last 2 month correction, stock is now again trading above 200-day moving average. So looking at the overall setup for SBI, we believe that if stocks continues to hold above 530 level, then possibly again stock can scale up further higher towards 570, 580, which is the next critical area for this pullback. If at all stock crosses above 580 level, then it will again resume its uptrend, which we have witnessed, earlier part of the this year. So looking at overall setup, we are bullish on SBI also with stop loss of 530. Bank of Baroda is another stock which we feel that upside can be continued towards 180, 195 zone. One can buy and hold this stock also with stop loss of 150.
Okay. On that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates after this break.
SBI has declared its numbers. Mahantesh is with us. Mahantesh, what's your perspective in terms of SBI numbers? On most parameters, it's looking decent.
We were expecting something like a 60% jump in the profit for SBI, but somehow the numbers don't seem to suggest any better than that.
Right, that's only about the profit, but on other matrices, provisions are not particularly that high. ROA is more than 1% for the second straight quarter. NPAs are declining. How do you look at it?
So NPA decline is a trend that has been seen in most banks by us, so that's not surprising. What was more important was in the terms of operating profit growth, particularly the cost savings that SBI should have done with a high growth in the NII. That somehow is not translating into profit numbers.
All right, Mantesh, thanks so much for that. Good to get perspective from you. Let's go across to Ashesha now. She's with us. Ashesha, which are some of the important numbers that the street would eye out for in the following week?
Six Nifty companies will be reporting their numbers next week. First up, we have Tata Steel, which will be reporting its numbers on Monday post-market hours, where we are expecting weakness on both quarter-on-quarter basis as well as on a year-on-year basis, and that is because of weakness in European operations. Consolidated revenues for Tata Steel are expected to decline by about 9% on a quarter-on-quarter basis, while margins are expected to contract by about 200 basis points on a sequential basis. We also have Bharti Airtel, which will be reporting its numbers next week, where we are expecting revenue growth of about 3% on a sequential basis, and this will be led by 2.5% increase in ARPU and subscriber addition at about 1% on a quarter-on-quarter basis. Meanwhile, Hero MotoCorp will also be reporting its numbers next week, where we are expecting marginal improvement in the EBITDA margin front on a quarter-on-quarter basis, and that will be on account of lower raw material prices that were prevalent during the quarter. 2% quarter-on-quarter increase in average selling price is expected, and that is mainly on account of the price hikes that the company undertook during the quarter. Moving on to Adani Ports then, where we are expecting 8% decline on a quarter-on-quarter basis as far as revenues are concerned, and 15% decline on absolute EBITDA terms. Overall earnings are expected to dip by about 25% on a sequential basis for Adani Ports, but that is mainly because of higher base during last year. Moving on to Hindalco Industries then, where Novelis, which is Hindalco's wholly owned subsidiary, will be reporting its numbers on Monday, while Hindalco's consolidated numbers will be out on Friday. Novelis EBITDA is expected to decline by about 22% on a quarter-on-quarter basis, and that is on account of high inflation in developed economies. While consolidated EBITDA is expected to decline marginally on a quarter-on-quarter basis due to lower metal prices during the quarter. However, it will be partially offset by lower coal prices that we saw during the quarter. Lastly, for M&M as well, margins are expected to contract on account of lower raw material prices, but net profit is expected to decline by about 15% on a quarter-on-quarter basis due to lower other income. Lower other income is on account of lower dividend declared by TechM at about 18 rupees per share in this quarter versus 30 rupees per share that it had declared in the previous quarter. So keep an eye out on all these stocks on the back of their earnings next week.
Okay, thank you so much for that, Ashesha. But Rajesh, I'm going to come to you now. I want to talk about the cement pack. Now, when you look at the cement pack, what we see and understand, yes, demand is coming back. But channel checks are suggesting that they're not able to take those price hikes. We're not seeing any price increases coming in there for the cement players. So, how are you looking at the cement pack? Anything that you're liking from the cement stocks?
So clearly, if I go with the stocks, so ACC and Ambuja has been beaten down. So we will avoid those stock at this current level based on the technical. But Ultratech is looking attractive. The kind of recovery which we have seen throughout the week in Ultratech, now stock is almost trading near to its multiple resistance zone area, which is at around 70 to 50, 70, 300 level. If at all stock crosses those level, then possibly Ultratech cement can move further higher from the current level, and possibly the next target for the stock could be around 75.50 to 7600 in the continuation of this pullback. So overall, this stock is looking attractive. One can buy this stock in any kind of minor corrective action also, with stop loss of 7000. The another stock which we like from this space, that is JK Cement. After corrective move, again JK Cement is now consolidating at lower band. Looking at the overall setup, now stock is holding its previous swing low, which was made in the early last part of January month. So 2550 is the important level. If it continues to hold this level, then this stock can also show some pullback action from the current level, and 2800 could be the possible target in the near term. To 2550 should be the stop loss to buy JK Cement for upside target of 2800.
Right. Kunj, what will be your idea in terms of any stocks that you like after this correction that we have seen? Anything interesting in infrastructure, cement, IT? How would you look at any of the names?
So what has happened is, as we have been repeatedly discussing, that especially in terms of large cap indices, we are in a highly range bound moment. Despite some of the reasonably big events in this week in India, the budget, and globally the US Fed interest rate decision, which will be followed by our own RBI's interest rate decision. Along with that flattishness in the market, we are going through the result season. Now, some noticeable things that have come in the result season, and as a result of that follow up, is the strength in the IT sector. After a reasonably long underperformance of more than 1 year, for the last 1 month, we are finally seeing a lot of money seemingly going into the IT sector, and as a result, of course, as I said, it is backed by the reasonably decent numbers that the companies have reported. The two sector where the numbers have been weak, largely in line with expectation, maybe more than expectation, are cement and consumer durables. Now, on the back of the weak numbers as well as the overall jitteriness in the market, the stocks in both these sectors have fallen sharply. When I say sharply, means anywhere in the range of 25-30% from their peaks in last 6 months or so. Now that gives a deep contra opportunity for patient buyers to buy into these sectors. Let me repeat: cement and consumer durables. But when I say deep contra, one has to keep in mind, one, as I said, patience, that could be long time period. Two, an assumption somewhere that the top line demand will come back. Consumption demand, we are clearly seeing that slowdown has been happening both in durables as well as non-durables. Here I am talking specifically of durables. And more importantly, the fact that the commodity prices should correct further from here onwards, leading to the margin improvement. So that is where the valuation wise, the stock prices of these two sectors, cement and consumer durables, have become very attractive for medium term investors.
Right. Rajesh, I'm going to come to you. What are your top picks then?
So in this volatile market, we have seen strong buying action in automobile space, and from that space, we like Eicher Motor at the current level. If we analyze the overall setup, stock is holding its 200-day moving average since last 10-15 trading session, and on the near-term setup, stock is now trading above 50-day moving average also. So looking at the consolidation breakout on the weekly chart, we believe that this momentum is likely to continue further. We are expecting target of 34.50 for trading point of view. Keep a stop loss of 30 to 70 to buy Eicher Motor. Second stock which we like is Chola Finance. Stock has given a strong breakout of it's managed to cross its November high also. Looking at the weekly setup, we believe that the kind of candle Cholamandalam has formed in this week, it's clearly showing that stock is going to continue its uptrend towards 840, 850 zone. So one can buy this stock also with stop loss of 755. Third stock is from telecom space, that is Bharti Airtel. After a corrective move, now Bharti Airtel managed to give breakout of last 2 week consolidation. Stock has formed a base at around 750, 760 zone, and the kind of recovery we have witnessed in the current week, it clearly suggests that some more short covering action can be there in the stock, and stock can scale up further higher towards 830 zone. So Bharti Airtel one can buy with stop loss of 770.
Okay, Rajesh and Kunj, thank you so much for joining in with us this afternoon on your trades. But let's move on and talk about what is going to be happening and what should you be watching out for in terms of cues for next week. And obviously, on the domestic front, important event is the RBI rate decision on 8th of Feb. On 10th of Feb, we also will be watching out for the IIP data for the month of December. In the global markets, let's keep an eye out on President Biden will be announcing the proposed budget for 2024. UK, keep an eye out on the IIP GDP data as well. Keep an eye out on corporate actions in on the domestic front. JK Cement will be mulling fundraising via NCDs. Gujarat Fluoro too will be mulling fundraisings via debt securities as well. So that's important cues that we're keeping an eye out on next.
With that, it's completely out of time from me, Winnie, and everyone that put the show together. But before we go into the break, let's hear out a special voice, Ravi Dharmashri. We spoke to him about the markets.